We're a minute away from starting. It's 3:59 here. Oh, we get.
Bagsy's joining.
Oh, okay.
What's up, surprise guest?
Hello, hello. Can you hear us, Bagsy?
If you're talking, my friend, it ain't working.
Good morning,
There you
guys. How's it going?
Hey, how are you?
Yeah, good. I saw you guys were going live. Felt like saying what's up and stick around for a bit.
Nice.
If you'll have me.
Of course.
I like it. Do you have any topics you're particularly interested in talking about?
Yeah, sure. I mean, I'm actually curious what your metrics detected for Cardano over the last couple of weeks.
Aha. I was actually going to talk about it right off the bat, actually. I was going to show off the prices for the top 100 and show that Cardano's done significantly better than most of the competition right now. So I was going to go into their trading volume as well as their social volume. I'm seeing that their trading volume has kind of declined a lot as their price has risen. So there's definitely a divergence going on right there. It's worth noting.
Oh, no, that's fine, man. I was going to say, we're actually at daily resistance from over the last, I think this is, wait, hold up. I'm on trading light right now, so it doesn't give me the whole chart. But yeah, so basically we're trending at daily resistance at the moment. So I'm in a position from the low 600s. Thankfully, I got lucky. I was on Mex and I saw some interesting volume on the hourly, so I just hopped in there and I rode it all the way to here. But I'm curious now that we're at resistance, will this updated roadmap actually mean anything? Are we closing on a resistance, but at the same time sticking to it? Because we haven't had huge rejection from the level either. So I'm kind of torn, which is why I'm coming to you guys.
I'm wondering, do you have a graph of your TA that I could share on my screen that you could jump in and do a quick commentary on?
Hold up one sec.
We also had, I think Gary wrote about Cardano's social metrics at the beginning of the week. So I'll have him jump on a call if he wants to add anything to the discussion. So give me 1 sec.
Cool.
Sure.
Yeah, the thing about the Cardano metric, since it's not an ERC20, we're kind of limited to just social volume, trading volume, and regular development activity. Not to say those aren't useful, but like we don't have things like top holders or daily active addresses for them yet.
Right. No, I noticed that when I checked the other day. I guess subconsciously that's the reason why I want to ask you guys here, as to why that was. But it makes sense that they have their own blockchain, which is why it's not as easy to uncover as Ethereum.
And it's something we'll probably get on in the future because there's been plenty of demand for Ripple, Cardano, and other Tezos, things like that, where we just don't have ERC20 data because they aren't ERC20s. So we got to find an alternative way to eventually get more data on them because I know the demand is there.
Right. So can you guys see my?
Yep.
Great. So this is Cardano on the weekly. We can see in 2017 had that insane run up, ran several 100,000% even, and then the bleed out. And we've seen over the last year or so, it's been ranging, consolidating. So as a trader, you generally want to pay attention as to when it reaches that upper boundary, that resistance that it's been unable to break. And once it does, if you're paying attention and you play it properly, you can average in, which is why this is on the hourly, which is why when we got, when we started getting this volume on the lower time frame, and I noticed these wicks to the upside. I think it was on this candle, if I'm not mistaken. Like that made me want to get in right away, and which is why I was able to secure this. And now, I'm smiling, right? But at the same time, I want to manage my position in a way that allows me to profit best. So one thing I'll do is mark out support resistance levels where liquidity might be lying, lying. So that resistance I was talking about on the daily is around here, I think. Yeah, 910, which we actually tagged and closed right beneath. So you had mentioned declining volume. I like to check the 4-hour for that. I look at divergences as well. So there's a pretty significant bearish divergence that I can't ignore on the tool I use. It's a modified CCI.
Just to verify, that bottom row there is volume, or is that something else?
This is volume. This takes into consideration candle closes. It's kind of like a different way of visualizing a moving average.
It's like a momentum chart almost, it looks like.
Yeah. So all that aside right now, I like how we've reacted to this daily resistance level. We haven't, just wicked into it and crashed. But at the same time, what I'm planning on doing is simply just look into average in further. Like as I said earlier, my entry is, down here in the 620s. It's at 670 now because I averaged in a bit further the other day. But I'm basically looking to capture and enter on any pullbacks. Hopefully something like this. You can also, if you're really smart, you can leave some buys here in case, Bitcoin, let's say, were to do something crazy, like a 1K candle to the upside, especially to the upside. Yeah, that's Cardano. What are your social metrics saying for that right now?
Let's check it out. Who's presenting
I can share.
Yeah, go ahead, Brian. And we'll see if we can get Gary. So, Baggsy, as far as I know, Cardano just recently announced the launch of the
mainnet,
right?
Right, yeah, so they updated a roadmap and they basically made the statement that Shelly would be coming out, I think, July 29th or 30th, around there. In addition, staking and some other, useless information, but that can be used to secure a trend. And I like larger cap coins like this when they have bullish catalysts coming up in the future. Like, I find these are the most reliable to trade, not only because they're more liquid, but also because more people know about it because of their network power, or just the power of their social media. So things like Tron, Cardano, Ripple, like I've played all of these, and these have been some of my most successful trades because I can capture several 100% without much work.
I think it actually, so the first spike that you see on this graph, Brian, like 28th of May, I think that's when the announcement was. No, even before that.
Right here?
Yeah, right there.
28th,
28th was when the announcement was. I know it because I shared it on one of our social channels. Okay. So, you can see what happened after the announcement. Yeah, the next couple of days were kind of crazy. So far, it looks like the social volume is kind of in a decline. Trading volume also over the last day or so.
Really steep.
Really, yeah. We have Gary on the call as well. Gary, I know you wrote recently about Cardano. So June 1st, that was what, 5 days ago. You want to maybe give us your perspective on what you saw and why Cardano was interesting at that point?
Thanks, Dino. Yeah, it all started at the moment when Brian posted a tweet suggesting to look closer to Cardano.
Yeah, I was getting some major social volume. I think I posted about it right around here when this spike hit, and then you shortly afterwards put this great article out.
Yeah, actually, a couple of moments later, they released this roadmap, the detailed roadmap, and the price began pumping along with the social volume. It continued a couple of days. The first top was reached around 1st of June, and this day Cardano ended up as line number 1 in Santiment emerging trends list. And after this moment, social volume, as long as the social dominance, began declining. So we had a picture when social volume and social dominance were declining, while the price still is to this moment is still increasing, and it's actually not good for the price. So we can suggest that price will not sustain its upward momentum on declining volumes, dominance, and trading volume.
Shot my position early.
I think there was another chart below, Brian, about there we go. So there was a huge bullish sentiment here for Cardano,
it's massive.
right? Yeah, which isn't good. Okay, can we go live to our social sentiment metrics for Cardano and see where they're at now? Is it still kind of... No, I mean the graphs.sentiment.net/social.
Got it.
Yeah, just so we can see what the Cardano-related sentiment is actually. Let's do it on Twitter, because that's usually the most reliable one, and that's where Bagsy lives.
It's like my first home now.
Bagsy's home. That's all you had to say.
How do you know I live here?
Yeah, so maybe time range, let's do 1 year, just so we can see the midterm trends, and then zoom all the way down to the last metric. So the last metric shows the difference between the positive and negative message. Oh, okay, that's not bad. So we see that sentiment is actually moving into bearish territory once again. So if you look at the few previous spikes, or sorry, the few previous sort of tops for Cardano, so the one in July 2019, you can see it was a relatively high sentiment, relatively bullish sentiment before the correction. And so then another one, what was that, like October of 2019 as well? Yeah, before the correction there was, and then in February 2020, the top was marked by a bullish spike in bullish sentiment. I mean, we see this for a lot of coins. We're going to talk about Bitcoin's social sentiment in a moment as well. It basically has pretty much the same pattern where all of these like extremely bullish overtones do tend to drive the price downward. So this particular chart looks at the way you should look at it is you should pay attention to the extremes, because if you look at the y-axis, it shows 3, 2, 1, 0. So what does that mean? It's basically the amount of standard deviations from the mean. So currently we're at around 1, I think, or actually now we're about 0.5. But we were at almost 1, which was essentially what it means is that on average the sentiment toward Cardano on Twitter was extremely bullish. So it started basically right as the announcement came, and now over the last 2 days or so, it's been dropping back into. I mean, it's still bullish, but it's been dropping back to like normal territory. So that's yeah.
I was gonna say, let's see if we make a higher low on this.
Yeah, right. Use the sentiment volume consumed as a higher high, higher low type of analysis, just like TA. There is probably a little bit of truth to that too.
For sure,
seeing
absolutely.
Whether the next high is bigger or smaller than the peak.
Yeah. So I want to ask. So let's say it has a value of 1. How far is that from 0? Because you had explained, I think, Dino, that it means that people are very bullish. Like, what does a 1 value mean?
It's like I need somebody from our data scientist team to.
That would be the real perfect. Nice.
So we actually talked about this very topic today in one of our calls, because 1 is just basically, it means 1 standard deviation from the mean. I'm not a statistician, so I don't know exactly how it's calculated, but essentially what it means in my own understanding and the way that the devs explain it to me is we're seeing a major sort of break from normal chatter, or just the average sort of ambivalent sentiment toward the coin. So the higher the more extreme spikes are, the more extremely bullish or bear sentiment is towards a coin.
Or in general, they're emotional. double at least amount of above or below average. And these emotions can be different. And as we discussed today, it depends on the market phase, how you interpret these spikes up and down. But it's clearly once it's above 0.5 or even one is the best.
Yeah.
The general crowd is emotional. Yeah. And then you put your own knowledge. Where is the market? You put other context into it and you make your call.
Mm-hmm. And it's important to note that sentiment volume consumed isn't just the ratio of positive to negative. It's also taking into account the amount of chatter about it.
Correct.
And in order to get this high around 1 or above, which is considered an extreme on pretty much any asset, you need to have a high amount of chatter overall, whether it's positive or negative. So this means that we're having both a large amount of chatter here, as well as an extreme ratio of positive talk versus negative. So it has to be kind of a perfect storm to get all the way up here or all the way down here.
Yeah, I mean, if we look at if we go back to Sandbase and look at Cardano's like social and trading volume, it's not looking great. It's looking like we're moving into like the price is pushing up into a declining volume of both trade and social activity. I would love to have actually on-chain metrics to see what's going on in terms of daily active addresses and exchange inflow, stuff like that. We don't have it at the moment, but from what we do have, I would not be super surprised to see a correction in the next couple of days. But the fact that the overall bullish sentiment is sort of declining is good, because it indicates that the crowd is not going full moon, full FOMO.
It requires a build-up, like
yeah.
Justin Sun is great at doing that. I don't know if Charles Hoskinson cares about that or not. I don't know him that well, but yeah, it's really depends on how they decide to release their news pieces, I think, because the whales are in, the crowd's in now. Now it's how far can you run them along?
Correct.
Or how and so we'll see how he plays this. I mean,
it's like what, a month from now, the Shelly update?
I would like to say 2 months, July 29th. We're under 2 months.
Right.
That's if they do not postpone. I guess the gut feeling I got is that it's pretty much certain, which, well, nothing's certain, don't get me wrong, but I think it's going to happen more likely than not, which means that they might actually have a decentralized internet. So that means that they have something really cool. So we'll see.
I mean, it's huge. I remember, Brian, can you look at the social volume for Cardano once again, just the overall time? At least a few of these metrics, I remember I checked them out at the time, and they weren't even price related. They were just like Cardano announcements that then became price related because the coin started pumping. So I think the coin capitalized on this Cardano announcement a few times in the past as well. The community really wants it, and I think they think of it as a major milestone. So I'm not surprised that the coin is pumping, but I think it looks like buy the rumor, sell the news type of event.
Yeah. Sorry, not sure what just happened here on the chart. Something right here made something go haywire. Give me just a moment.
But yeah. Anyway, I think, Brian, if you want, you can already kind of go into your templates, so we can start a little bit talking about a little bit about Bitcoin, because there's a lot to cover. There's a lot of interesting and fun stuff that happened over the last week or so, Bart notwithstanding. So yeah, you want to jump into NVT and other templates that you have for Bitcoin prepared?
You bet. Yeah. I'll start off with just a general overview of what's been going on with the top 100 market caps. And you can clearly see Bitcoin here as the #1 market cap. Had a change of about 1.7% to the plus range over the last 3 days. Ethereum did a little bit better at about 2.5%. But you can see for the most part, altcoins just dominated the price returns since Tuesday/Wednesday or so. And you can see outliers like Wax, Divi, and then on the shorter, the top 10, top 15 or so, Cardano and Crypto.com coin, they did really well. But in general, you know, when you see this kind of altcoin dominance here, it's probably a sign that there's some good profit taking opportunities because of the fact that Bitcoin is lagging so much behind. And with any sort of dip going on in this kind of scenario, it's going to make all of these big spiked short-term gain assets just, you know, plummet if Bitcoin falls, because it means that there's not a lot of stability here for this kind of divergence between all of these, you know, top 100 assets versus the top 1 or 2. And when that happens, it's generally a good idea to not simply sell off to USD, but, you know, if you want to stay in crypto, it's highly advisable to just, you know, if you have a position in Wax and it's up 76% the past 3 days, maybe a good idea to take a little off, put it in Bitcoin, and if Wax retreats down here, then you can just get right back in it, right? So generally, this is a great thing to look at. About 80% to even 90% of these coins are in the green over the past 3 days. So it's fine as long as Bitcoin's in the positive, which it is, but 1.7% over the past 3 days is not much. So definitely important to keep in mind the strategy of being able to not get greedy, take profit where you can when you see these huge outliers compared to Bitcoin, and proceed cautiously.
Wax looks really good.
Yeah, I looked at the social volume. It's not worth getting into on.
Is it on Ethereum? What is Wax?
I don't believe it is. No, it's not an ERC20 because we don't have data on it.
Okay.
But their social volume's been rather tame, just because it's not really been discussed much ever since its emergence about 2.5, 3 years ago. I remember on Bittrex it first got launched and it just went nuts as like a 300-400% gainer right on day one, but it didn't do much after that, and it's been relatively silent. I'm sure it's had a few spikes here and there. I haven't been paying very close attention. Have you seen anything, Bagsy?
Yeah, can I share my screen quick?
Yeah, absolutely.
Is that all right? Cool. All right, let me see. Percent now. Here. So MFI is through the roof. We just broke out of.
Can you explain what MFI is for our viewers really quick, by the way?
Yeah, so basically MFI measures the difference, I guess, between buys and sells. Yeah, so it's a volume-based oscillator. And the thing that's most interesting to me is that we're breaking out of this this range that we've been capped at since last July, similar to Cardano and a lot of other altcoins. Plus, the volume's been growing over the last. Well, we'll discard this. This is just the pre-accumulation pump. So the volume really started coming in May 2018th, 21st, around there. So in terms of this, like, let's put this on the daily. We'll wait to see how the day closes. I mean, I'd really want to see a daily close above 812 or 1.82, 8.12K sats, whatever that is. But this is definitely something to maybe try and get in on a pullback if it happens. But you know, not financial advice. But these are generally good things that you want to see. This type of volume is great if this is real. You know, this could just as easily fall back within the range, and then, you know, Bagsy's the worst person in the world. But that's why you have to pay attention to closes, and you have to be patient. And yeah, but this is interesting. I would keep an eye on it. But I don't trade on. I think it only trades on Bitfinex now, so it's not really an available asset for me to trade. But maybe it is for y'all.
So if you're a betting man here in the short term, Bagsy, would you say it's a more likely scenario that it retraces a bit? Not to put you on the spot.
No, I don't think it does, actually. If it is what I think it is, I don't think it pulls back much at all. Like, I would set a really tight stop. And I would look to average in let me share my screen again. Sorry. Here, percent now. Okay. Yeah. So this is. Let's put on the 4-hour. Hourly. This is very like impulsive. So max pullback I'd want to see. I don't know if you mean this by pullback is 687. Which on the daily time frame would be the low of that daily candle. That's as much as I'd want to see in terms of a pullback. So something like this. But I think it'll max do that. I don't think that if we do see this, I don't think it's good. Like I think it's more likely if we were to get to that level that we just get a dead cat bounce and we continue downwards. And you don't want to see that. So max, that's how I play it. Does that make sense?
Yep, totally. Thanks for sharing that.
Yeah, no problem. So like how I'd layer in, I'd probably put 50% here, 50% in, or maybe like 25. I'm more degen, so I put 50% in here and 50% at the low, probably. If I'm at my computer, I wouldn't necessarily run a stop, but I'd probably set one down here. It's a pretty wide stop, to be honest, but that's the tough thing. I don't even know if you could set a market stop on Bitfinex. I don't know if they offer that yet. I don't trade there. But yeah, thank you guys.
Gotcha. Thanks, Bagsy. All right, I'm going to jump back on mine really quick.
How's a quick question? How's Serbia doing right now with the whole COVID stuff? You guys good?
Yeah, we're okay. The quarantine is officially over. The chief, I guess the doctor in charge of the entire pandemic said the pandemic is officially over, which is really a good idea, I think, because we're still getting about 50 infected people a day. Nothing too crazy, but on the other hand, you really like if you go outside. If you just woke up from a 4-month coma, you would not know that there was anything wrong. Like people are just in parks and coffee shops, nobody's wearing masks or gloves or stuff like that. Like a few people like that work at cashiers and whatnot, they do. But other than that, it's just business as usual. So I'm a bit wary of a second wave. But other than that, yeah, the life is coming back to normal a bit.
Good stuff.
Yeah. Sorry, Brian, go ahead.
All right. Yeah, no worries. So we're looking at Bitcoin's NVT right here using our Sandsheets model. What we see here right now is a bit of a turnaround that's happening. We have enjoyed, a good March, a good April after the obvious, Black Thursday crash that sent prices down to about 3,700. We saw nice token circulation in March, nice token circulation in April, and then it kind of evened out in May. And typically these yellows are a bit of a sign of a long-term turnaround. And this isn't to say that we're about to retrace back to 5, 6, 7,000, but it is saying that, going into June here, after we have a May turnaround signal, like a neutral one that showed up here, this red is a bit concerning. And obviously we're only about 4 days in as it's doing a refresh, right, as I'm explaining it. But the first 4 days of June are looking bearish right now. We aren't getting quite enough token circulation to justify being here in the mid to high 9,000s. And what we want to see over the next week or so is a bit more of a return to the token circulation we were getting. And what we see here on sand data is a slight decline over time. And it's hard to see through all the noise, but if I were to draw a moving average, it would basically be a little like this, a little bit like this, and then things drop off. And hold on, I need to actually get the last 6 months because that wasn't correct. There we go. Same thing. So we were going up like this, and then over the past 6 months, the moving average has kind of stabled out right around here. So our biggest token circulation obviously was right around March. And then we saw a decline followed by a huge spike in late April, it maintained in mid-May, and it's kind of dropped off just a little bit here. So in order to
during the BART, as you can see,
the Bart Simpson signal, and it's okay that token circulation mostly looks pretty even, but the reason we're now getting a bear signal is because it stayed even despite price moving up. And in order for NVT, to continue being neutral to bullish, you need to see token circulation going up as the price is. So that's kind of why we're seeing the bearish signal that was showing up before the refresh started. And it's something to keep an eye on. I'm a little concerned right now personally, because our prices have just continued to blossom, but token circulation hasn't really shown much improvement. And for those who don't know, this token circulation is a measurement of unique tokens being transacted on the chain. It wipes out things like wash trading and stuff like that, and only counts every token one time per day. So in terms of tokens being moved one time per day, we're not really getting the lift off that we should be getting right now. But that being said, we're not getting a huge drop off either. It's mostly just kind of staying stagnant. So it seems like the market is waiting for the price to, again, try out 10K to see if FOMO can kick in, or if it starts to drop off and FUD kicks in, and then we'll start seeing a rise in token circulation, in my opinion. We just have to wait for something to break one way or another, because we're at sort of the polarizing price right now.
Mm. Can you also look at the price DA divergence for Bitcoin while we're already here? Because obviously what NVT does is it tries to kind of figure out the relationship between the market cap of a coin and the amount of value that is transacted on the network, right? So currently, the amount of value transacted on the network is kind of low related to the valuation of the network in terms of its market cap. On the other hand, this particular template that Brian is showing right now is doing a similar thing, but instead of looking at the transaction volume or the token circulation, it looks at the actual amount of addresses that are active on the chain daily. So this current setup that Brian has, it triggers a buy or sell signal depending on the differences between the coin's price and the coin's daily active addresses. So when the price keeps going up, but the amount of daily active addresses goes down, if it crosses a certain threshold that we've set, it will set up a sell signal. And if the price keeps going down, but the amount of on-chain activity either stays the same or is actually trending upwards, then it will shoot off a buy signal. So you can see a few buy signals in a row during the Black Thursday pump here, the Black Thursday dump here before the rally. Basically, being indicative that even though the price has tanked quite a bit, the actual amount of addresses on interacting with Bitcoin have either spiked or have remained in the same level. So currently, over the last maybe 2 weeks, we're not really seeing anything out of the ordinary there. So even though the price is, trying to break 10K for a few times in the past couple of days / weeks, the daily active addresses at least have stayed relatively loyal to the price activity as well, right? So we're not seeing this huge drop-offs in the amount of addresses interacting with BTC as it tries to pull above. So far, there's enough fundamental support in that sense for another push upwards, right?
Yep, that's exactly right. Unlike the NVT, which isn't keeping up with price, daily active addresses essentially is, and I actually have it pulled up on Sand Data as well, so you can really see how they've correlated with each other. So if I isolate token circulation here, excuse me, had it on daily active addresses a second ago. There we go. Daily active addresses are essentially following right in what price is doing right now. It almost kind of ignored what happened on Black Thursday, and it's continued to ascend over time. And this is great. This is what you want to see for a long-term asset having justifiable growth. And overall, daily active addresses have been going at this pace pretty consistently over the last 6 months, and it's been the reason that after Black Thursday happened, we recovered so quickly, because the trend over this period of time basically didn't skip a beat. It had kind of a slight lull for a couple of weeks, but when you look at the overall trend here, it's just a constant ascension upward over the last 6 months.
Yeah, this choppiness is usually, at least what I see, is attributed to weekend activity dropping off. So it's not necessarily like that the reason why the daily active address activity is so choppy is mostly because on average the amount of activity of the network declines during the weekends rather than any other reason. It's similar to like development activity. You'll see the same thing, these types of like choppy ebbs and flows all the time. It's just, it's normal market behavior.
Yeah, one day I'm actually planning on going in and having like an average per day of week, since we always have kind of a lull on Saturdays and Sundays, and going off of the median for that particular day so that it adjusts for regular down days and regular up days during the week. And we might even see a more accurate predictive power on this template down the road. But for now, we're basically in neutral territory, and it's been a very reliable indicator for our Sandbase users. We're seeing, bunches of green here, price goes up. Suddenly we get a series of reds and the price tops out temporarily. Then we see the bullish divergence again, and there goes the price. And we've been neutral ever since here, which is interesting because we continue to go up, but DAA was more normalized at this point, meaning that probably right around late April is when we started to get back to normal expected DAA after Black Thursday kind of threw everything into a loop. And then, we saw one single spike, which isn't as reliable, but in this case, it perfectly timed the top. And we got that 10-day window of dip. And then right afterwards, it kind of started going back up again. So really good indicator here that I recommend.
Hey, since we're already 40 minutes in, do you mind me jumping in and showing a few more Bitcoin metrics before we kind of go into, because we also have a few questions from the community that we wanted to address. So let me just share my screen real quick and show a few additional cool stuff that I noticed about Bitcoin recently. You see my screen, right? Or you should be able to.
All looks good. Yep.
Okay, so a few things that I found quite interesting. So first of all, social volume for Bitcoin over the last month. Yeah, so this is I know I mentioned this to Max I think yesterday. I found this really funny. So if you zoom in on the last week, there were two spikes in Bitcoin social volume over the last week, and what do you know? The one came at the very beginning of the bar and the very end of the bar. Basically, earmarking this move above 10K, and then as we dropped below, actually right before we dropped below, it also spiked quite. Marking the bottom as well. So once again, I think, Bitcoin social volume, or just the social volume in general, showing how powerful it can be in kind of spotting the changes in price trends. One other interesting thing that I noticed, I think we wrote about it, or maybe we didn't, was it's token age consumed. So what this metric does is it tracks the activity, or it tracks the activity of previously dormant coins. So essentially, when you see spikes in token age consumed, what that means is that a substantial amount of coins that have not moved between addresses for an extended amount of time are now starting to be on the move again. And usually that tends to correlate with high volatility for a coin. So if you look at the last, let's say, 3 months, this spike is actually quite big. Like, let's ignore these Black Thursday dump of spikes. This one was the biggest one since here. And it came right before the push above 10K. So I would assume that these two spikes here correlated with some long-term holders kind of getting ahead of the rally. And if we look at Ethereum, we see an interesting activity in terms of token age consumed as well. But in fact, it happened. So if we zoom in a bit so you can see the magnitude of it. Yeah, it happened right before the correction. Once again, I think we mentioned a few times already that token age consumed for Ethereum has kind of been very on point over the past couple of months in terms of like earmarking its local bottoms and local tops. So the fact that you see this massive spike in token age consumed, meaning some long-term Ethereum holders are starting starting to move their bags right before the correction. It's not something that I'm surprised about at all. So yeah, it's something to keep in mind. Tokenage consumed, one of my favorite metrics, just to keep track of like changing trends among long-term holders. Once again, being very much on point here in both cases. Yeah. So one other thing, I agree with Brian that I've also been kind of seeing slight causes for concern. One additional metric that we just this week introduced to SandData is if you go to SandData and click on holder distribution metrics, you'll find a few new very cool indicators that we've added. So let me go to Bitcoin, let's say last year, and then we can maybe zoom in if needed. So if you go all the way down, this chart in particular, we just recently added it, and it's very cool. Basically, what it does is it shows you the amount of addresses holding more than X amount of any coin that we're tracking on-chain data for. So I wrote about this recently when we added this metric, like zoom in a bit, and I wrote about the in particular behavior of addresses holding more than 100 Bitcoins. These mega whales are just very well-off individuals. So the first very cool thing that you can see is that they did not care or were not scared about this Black Thursday dump at all. This is 400 new addresses being added to the 100 plus BTC club over this 5-day period. So it doesn't seem like they were very much scared of like a longer bounce back, a longer drop off, or anything like that. And so they started accumulating here once again. And so their first drop off in holdings, or the amount of addresses holding more than 100 Bitcoin, correlated perfectly with this first drop off here. And so I wrote about it somewhere around here. I mean, I wrote an article called "Making a Cautiously Bullish Case for Bitcoin" when it was around here, so it was pretty good. But the point that I made was that over the past 5 days when I wrote it, these mega whales were once again kind of in accumulation mode, which if you see like historical patterns, kind of correlated with short-term rallies as well, which makes sense, right? Accumulation among whales. Recently, they've been dumping again. So I would be, cautious to keep an eye on this metric. It seems like over the past few days, at least, they stopped kind of offloading their bags. But there was, the accumulation period is definitely over for them. As this push above 10K started, they started dumping once again. So this is, at least in short term, it doesn't look like a very good sign for Bitcoin's chances as far as the whale confidence is concerned. So yeah, we'll keep an eye on it. But this is I strongly suggest checking out the holder distribution metrics we just added on SandData. It's very cool stuff to play around. You can look at anything from like very short or very small retail holders to like huge mega whales for any coin that we have on-chain data for. So check it out. Okay. One additional thing that I wanted to mention as far as Ethereum is concerned is that their miners are once again dumping. And this is where I think Max and I usually bump heads a bit, because I think that this is a fairly bearish signal, but Max thinks at least in like long term this is bullish. I'm just looking at the trends recently, like what happened with the price of Ethereum every time they dump. So here they obviously started dumping significantly right before the top, and then there was a massive accumulation period, and then what would you look at that, right before sort of the Ethereum started peaking here in the February of 2020, we saw the collective balance of addresses belonging to Ethereum mining pools once again starting to decline. We saw the same thing happen here when Ethereum broke above 20, I think, or is it 10? And it correlated with the consolidation period and then a correction, and the same thing happening once again. So another sort of thing to keep in mind, and maybe not a great signal for Ethereum's short-term potential. And we recently added this chart, which is kind of cool. It's showing the direct inflow of coins, Ethereum coins, from miner addresses to exchanges. If we look at miner deposits to exchanges over the last, no, I don't want you. Go away. Thank you. Yeah. If we look at it over the last couple of days, actually, let me zoom in a bit. This is like, yeah. Here, you see it kind of picked up pace right before the top. So miners once again, it went from like 8 deposits a day to 420 deposits at this particular point. So maybe a sort of a positioning to sell, which seems to have impacted the price a bit as well. In general, I think miners and what they're doing in terms of their holdings and how they're distributed. It's super fascinating. And if you look at just the general sort of trends in their balances over time, you can't deny that there seems to be quite a they seem to be quite impactful on the short-term price of Ethereum, right? So yeah, something to keep in mind. Okay, we're 45 minutes in, so we are now going to jump into a few questions that we got from our Sandbase Pro members. Basically, guys, everybody that's listening to this call, if you are a Sandbase Pro member, you can ask us questions, anything that you want to know, any coin that you want us to cover, and we will try to do that in these weekly videos. So we have a few questions. I think I have them here. I think first, Max, you wanted to address from one of our Sandbase Pro subscribers. He asked, what are the reasons for such high exchange outflows of Bitcoin recently? Is it accumulation or something else? And I'm also subscribed to Glassnode. Their estimations of the number of BTC on exchanges are quite different from yours, who has the better numbers. So Max, do you want to take this one?
Yes.
Okay.
First, I'll answer to the second part. We got from few people, and then we look carefully what numbers we're sharing. Our current numbers, which we were sharing, are not correct.
Mm-hmm.
And we find out that we have some, funny, well, not funny, but some back-end calculations. So for the moment,
this particular
yes,
metric is what you're referring to. So the supply of Bitcoin on exchanges in particular is the metric that seems to be bugged.
Yeah. So the scale of change is okay.
Yes.
The absolute numbers are not okay at the moment, how we show it. So give us a little bit time to show the correct numbers. And
yes.
thanks for pointing out.
We just recently introduced exchange metrics for Bitcoin, so I think we're still working out the kinks. The relative numbers are fine. Well, the relative numbers, the relative trends, I guess you could say, show a good picture, but the actual absolute numbers are not currently correct. So, but then let's look at
now answering to the first part of the question. What could it mean? Yeah. And, there are a few theories we have in our team at the moment. One, because of growing derivative market, quite rapidly growing, then over-the-counter market. And you've definitely also read the news about Grayscale buying out Bitcoins. Yeah, well, it's not hundreds of thousands, but the tendency is there are different players who are accumulating Bitcoins or need to obtain Bitcoins to maintain their positions, and they're not officially exchange addresses anymore. Yeah, so they are players, they're kind of not real exchanges, but professional players, but it cannot be labeled as exchange addresses anymore. So this outflow is part of it. There is a strong inflow of professional institutional players, and the data confirms it. Yeah, they're obtaining BTC, they're keeping it, they do custody for their clients. And it's a question now for us as a platform, so data science, how do we label this holdings? Because it's not speculators. They're not like moving Bitcoins here and there frequently, as you will see on some other of our charts. So it has to be labeled properly, but it's for the moment white spot in data labeling industry. How do you label this growing number of professional participants? Yeah, so to cut it short, it's a good sign for Bitcoin. So these Bitcoins are taken away from circulation on exchange. Yeah, just don't take it as a direct impact. Okay, price will explode. It can, but the price discovery is not so straightforward. If even supply is decreased on exchanges, which we believe it is effect. Still, we can swings here and there. Yeah.
Okay.
Because of exactly this derivative market. You see, the derivative market, we've seen it in the last 2 weeks. Price can go 1,000 up and down just by like that, very fast, because some players see an opportunity to squeeze the shorts or to punish the longs, and they do it. It's easy. It's market is still like it's nothing if you have enough money and you can leverage. So don't get scared by the swings too. Okay, anyway. I'll try to answer this question.
Sure. Thank you for the answer. We have another question from Tarek. He said he had actually a couple of questions. If Brian can maybe show a quick demo of sand sheets and how it can be used on one particular feature. The simple definition of MVRV, he says it may be repetitive, but haven't understood it, completely understand. So let's try and fix that now. And if we see any new blockchains like Binance Chain to integrate that data, will it be possible, and how long would it take to integrate the Sandbase? This is, in general, a pretty good question. Well, for Binance Chain in general, we have the data already. We've integrated in the past few months. So if you look at the BNB, you'll be able to see a number of on-chain metrics here. Yeah, and I think Max, Binance Chain integrating BNB was fairly quickly, right? It was, I mean, relatively painless. For something like Cardano, I think it requires a completely new infrastructure for our developers, starting basically from scratch. Obviously, anything can be done. It really boils down to how much customer demand we have for it. I think as more and more people start asking us about a particular network, like Cardano recently, the more privy we are to try and rectify the lack of data that we have for it. I think that's probably the best way to put it. Max, anything to add to that?
No, nothing on my end.
Did you ask me or Baxi?
Max, yeah.
Oh, I heard Bagsy. I'm sorry.
Oh, no worries. Yeah. You can chime in, man.
No, I'm good for
No, nothing to it. We added actually 6 or 8 months ago Binance Chain, and we did quite some investigation to the data. There are some interesting pieces here and there, but not used much. Not as interesting as Ethereum, because Ethereum does represent. Just to give you some background, when you analyze on-chain data, Ethereum, Bitcoin gives you a lot of deep information for behavior analysis. You can spot the groups, you can split them, build metrics. It's very insightful. Binance, no, not really. What is insightful is the AMA and the social activity, because there you could spot pumps and dumps much easier without even looking to on-chain data. But this is the nature of Binance stage at the moment. Once they start using the blockchain more intensively, it will become interesting.
Yeah,
it's not really used much.
Let's quickly try to once again explain MVRV. So I know that in general, MVRV is kind of a difficult concept. I don't even know if I'm doing a very good job of explaining it, but let me try again. So we obviously have a number of MVRV metrics here that you can observe. So MVRV, what it tries to do is it tries to calculate the average profit or loss of a certain subsection of holders or of all holders on the network. So the general MVRV, not these time-bound MVRVs that we have. So the general MVRV looks at the average profit or loss of all, in this case, Bitcoin holders over time. So essentially, what is the average, on average, what is the current profit or loss for a Bitcoin holder? The way it does that is by dividing the Bitcoin's market cap by its so-called realized cap. And realized cap is it's a fairly new method or a metric that was introduced over, I think, a year and a half. Essentially what it does, or how it's calculated, is you look at all of the coins on the blockchain, and you take the prices of those coins when they last moved on the blockchain. So it's essentially acting like an acquisition cost of all of the coins on a particular network. So when you combine or sum up all of those acquisition costs, you get the realized cap of a coin. And so when you divide the market cap of a coin over the realized cap of a coin, what you get is the average profit or loss of a certain subsection of holders. So currently, for example, what are we seeing? We're seeing that the current level of MVRV is 1.71. So that means that on average, the full MVRV, so from the inception of Bitcoin's network, that means that on average, all Bitcoin holders are currently 70% on their initial investment. Now, why is MVRV in general important? Well, it's important because the extremely low and extremely high levels of MVRV have often been very good opportunities to buy and sell respectively. So when the MVRV tends to dip below 1%, let's maybe look at last few years to show you that. Okay, let's not look at all time. Let's look at maybe 50. Let's see. Actually, let me look 17. Right. So, for example, here, right, we're looking here at an MVRV of 0.72, which means that on average, Bitcoin holders are 30%, almost 30% or 28% down on their initial investment, because one would be break even, and then anything above would be, a percentage of that they are up on their initial investment. Anything down would be how lower they are compared to their initial investment in the network. So here we are seeing that on average, Bitcoin holders are about 28% in negative in loss at a loss on their initial investment, which is usually and has so far proven, if you look at these other MVRV levels below 1%, like here. They have usually been opportune times to accumulate, simply because there's not a lot of selling pressure, because people are not really incentivized to sell them because there's no profit to take. There's usually a relatively high buy pressure at that point. So in the past, we have seen these levels kind of correlate with a consolidation period before a rally. And then vice versa, we have very often seen these extremely high MVRV levels correlate with local and all-time high tops. So for example, here in 2017, at its peak, the MVRV was almost 4.59%, which means that the average holder was about 450% of their initial investment. Now, that's probably never going to happen again as the market matures and people stop expecting these types of returns for Bitcoin and altcoins as well, and that's why you see the MVRV kind of flattening out over time. But yeah, the way that you should look at MVRV is you should sort of try and figure out what the historical highs and lows were for Bitcoin or any coin that you're particularly interested in, to determine whether we are in sort of a danger zone or a healthy zone for a coin's price action. If we are, for example, at maybe 2.5 MVRV level, which means that average holder is like 250% of their initial investment. If that has in the past proven to be a very sort of tenuous point for the coin's price action, or it has been something where the corrections came shortly afterwards, it means that these are the levels that historically holders were privy to sold and take some profits. Like, for example, let me show you Ethereum. I just recently looked at Ethereum's MVRV for the 30-day period. So these time-bound MVRVs, essentially what we do, rather than look at the MVRV of all coins on the network, we also calculate MVRV ratios for coins that have moved only in the X amount of days or amount of years. So currently we're looking at the MVRV, the 30-day MVRV, or the MVRV of only the coins that have moved within the past 30 days. So short-term holders, essentially. And here you can see, that, let's look at maybe the last, yeah, there we go. So here you can see that for these short-term holders, usually the corrections come at these levels, like between 1.15 and 1.35. But like 35 is already quite high, but that's usually as high as it goes. But between 1.15 and 1.35, So between 15 and 35%, these short-term holders seem to be content with their profits, and the market kind of starts correcting for these elevated levels of MVRV, right? So this is what I mean when I say look at historical levels of MVRV to try and inform your decisions on where we are in the cycle, and whether the either short-term or long-term holders have in the past been, how have they behaved at these levels of profit or loss? Did their behavior impact the market in an adverse or a positive way? So this is how I would explain MVRV. I hope that was simple enough. There's an article here that you can use to kind of get more information about it, as well as a video description of it. But yeah, in general, MVRV just tries to calculate the average profit or loss of coins that have moved in an X amount of time, which is equivalent to either short-term or long-term holders.
Really solid explanation there, Dino. One thing to mention, when you see something really high, like above 2 for MVRV, you got to make sure to subtract 1 when you look at it on Sandbase. So when you see like that high of 459%, it's actually plus 359% for people. And that can be a little confusing sometimes because on Sand data, it revolves around 0%. So it's a little different how it's displayed on Sandbase versus Sand data.
Yeah. So yeah, that's as far as your 2 questions are concerned. Then finally, Brian, I mean, we're kind of actually in an hour mark, and I think you explaining sand sheets is probably going to take at least 10 to 15 minutes to really drive the point across. So maybe we'll just leave that for the next week's call. I don't think there's any rush, or we can kind of get in touch with the user personally and kind of explain it to him there as well. But yeah, guys, if you have any additional questions that you would like us to answer, if you have, certain setups in terms of, Bitcoin, Ethereum, or other coins that you are curious about, we had a great question last week or the week before, I can remember, about chain links, spikes in exchange inflow and tokenage consumed. It made me kind of go deep into what's been going on and find some very interesting patterns and interesting addresses to keep an eye on going forward. So that helps us as well. So keep an eye on, keep an eye on those and let us know what you would like us to cover, and we'll get to it in the next week's video. So finally, if you liked anything that you heard or saw today, check out santiment.net. We have over 100 different metrics and indicators that we have developed based on-chain social media and development activity data for over 1,000 cryptocurrencies now at the moment. So yeah, everything that you've seen and heard today can be acquired or used on santiment.net. You will get a 14-day trial to kind of play around the platform and make sure that it is actually as powerful as we think it is. And then, yeah, join our Discord as well if you don't want to wait until next week's call, because we talk about this stuff on a daily basis. You don't have to wait until next week to ask us about Cardano or Chainlink or Ethereum, anything at all. We have trading channels for that specific purpose where you can get your questions in and we can talk about it together collectively. So I would really like to thank everybody joining me today. Brian, Bagsy, Max, Gary, thank you all for your contributions to this call, for making the world a better place. Yeah, and in general, yeah, thanks for joining me for a chat. And I guess I'll talk to you all in 7 days.
Thanks, guys.
Awesome.
Appreciate it.
Thank you all.
Bye.
Bye.